So that kind of goes into your second thing where I love to invest now, really is because I have a lot of active real estate. And then I have active real estate with JV partners. So that takes a lot of time. So let's talk about what a pain in the butt real estate is. Okay. So everyone here should know that real estate is painful, it's annoying, and it's whatever. But obviously we love it because it gives us access to life we otherwise couldn't achieve, which is why I got caught up on all the hoopla to begin with. Is you'll make, like, it's big money and it's big transactions and it's exciting. And that's why I got so caught up.
It's addictive too. It's flat out addictive.
I'm supposed to be a teacher, and now all of a sudden I'm doing this apartment buildings. This is like little old me. Yeah. That was the ego side. Yep. But now I prefer in these larger opportunities to do what we were talking about earlier, which was the passive investments. And I love private market products. So I was actually learned all about self-directing all my registered funds. So all that money that was $40,000 projected returns in these normal REITs and all these other sort of things, I pulled everything out and I put them all in private market products. I pulled my kids' RESPs in private market products, all these sort of things. Now I have investment. This is what I'm consistently investing in. Self-storage opportunities. These are big funds, multi-billion-dollar trusts, but they're private. They're not publicly traded. REITs are publicly traded. You have little control. You don't know where your money's going. It's just dispersed. Plus, it's all sustainability at that point. In the private market world, this is where the growth is. All those REITs that everyone's investing in now, they were once private. They were once private. So this is where you want to get in, is you want to go in to amazing opportunities. And I didn't want to be in charge of this because I've seen my capabilities and what I could do. I can get a much higher ROI in active real estate and doing all this, but I see how much work it is. And I think when I regain my focus, I want to do one thing. I just want to work with funds who are doing one thing, and I'll have a smaller piece of a pie.
But you get to play tennis.
Than having the entire pie, and I don't got to do any work. And that is a passive investment, but there's so much growth. I can research, I can meet the directors, I can vet these people, their track record, their history, their previous project, and I get like front row seat on the growth of these investments. And they're from licensed professionals that protect my money. So they have to answer to the Securities Commission.
So, but this can also be intimidating for different reasons. Some people aren't feeling comfortable to walk into these rooms and feel, again, they get that little me, idea
by the big bad
This is where the
guy.
top 2% are growing their money. The top 2% do not do things everyday people do. They are not putting their money in REITs and whatever. They own the REITs. You know, they're in the early opportunities, and we want to help people overcome this little old bee and take away that fear by educating them and giving them the information they need. We're all about education and empowerment, and that's why we did our rebranding to RPI Education, because when we were Real Property Investments, I was on our website, it made us sound like we're an investment firm and people had to invest with us.
Right.
And I had properties that I don't want you to invest with me.
Right.
I want to share our power teams with you, learn what you want to do and help you invest for yourself with getting this education required. So I was actually on another podcast where this person asked to interview me and they were practicing their coaching skills. It was kind of like this backwards podcast.
Okay.
And she called me on that. She said, RPI, or Real Property Investments, sounds like an investment firm. You've done like $1 billion in transactions, blah, blah, blah. It sounds like you want me to invest with you. And are you a fund? I'm not a fund. Then why are you making yourself sound like a fund?
Right. Yeah.
Why don't you have education in the title? 3 days later, rebrand right away. So when I see something that needs to be changed, we go in and we changed everything just from an outsider's perspective, because to me, that meant the world. And this is what these people need to get over themselves and learn that you do deserve to be in that room, or even behind your computer screen. You need to start thinking differently, acting differently, and investing differently. So if you don't, you're going to continue to be this statistic.
I think this is really interesting because I've never really heard someone, I don't know if critique is the right word, but these things are so in vogue, these JV, active, flips, this, and you know, you're someone now who's gone through that and says there's even better. If you thought that was good, you can now testify to your experience that there is something better. And I don't know if I've really come across that a whole lot, to be honest with you, because every single thing that we see is trying to sell these programs devoted to, like, you would be up there with those 100 transactions as the poster child for these programs. And now you're saying there's something else. So maybe let's unpack those private opportunities a bit more.
Just a little bit, yeah.
Yeah. What would you the elevator pitch, and I hate to say that, but to someone who wants to learn about that, where would you start with them?
Are you tired of low or no growth returns in your registered funds? Do you want more control over your investments?
I'm standing up. I'm standing up.
Reserved for the top 2%.
Yeah.
Because now it's since the eligible investor status came, and I think that was in 2016, was it 15?
Not sure, but yeah.
I think it was earlier. It was like 2012 or something. Anyways, when that changed from just the accredited investor, there was a huge party going on that only the rich people are invited to.
Yep.
And if you're not an accredited investor, you couldn't do this. As soon as they open up the door to eligible investors, and everyone is pretty much an eligible investor, at least if you're investing in real estate, you should be an eligible investor.
Yeah. You got some credit.
Now everyone's invited, and people need to start thinking differently and thinking like the big boys. Now, finance has a history of talking over people's heads to keep them dependent on financial advisors. And I'm the ventriloquist here, where I work with the top people in the industry, the smartest minds, the best financiers. And they say blah, blah, blah. And I'm like the ventriloquist sitting next to them, their dummy, going, what he's saying is, and we break down this to layman's terms and everyday concepts. Because the reason people don't understand, is because they're talking over them. Whereas real estate is simple.
Yeah.
But investing is simple. Warren Buffett says if a 4-year-old cannot explain the investment with a crayon, do not invest in it. Right. All these projects that I invest in are super duper simple. Yeah.
So everyone knows kind of, all right, well, the starting point, I understand I need to get, if this is the other approach that maybe is somewhat in your rearview mirror, but maybe what you start with is I need a great deal on some bricks and mortar, and I can understand the Burr method. Yeah. That now people understand. With these private investments, where do people start from that? Because that's another thing. I don't know where to start. That's what everyone says with everything.
Well, that's why the first thing we do with people are called intake calls. And I've actually created a methodology where we overlook someone's entire, some strategic questions, financial plan and their mindset, where they want to go, and show them exactly, that's what we do at RPI, show them where to start, and then connect them with licensed professionals to help them get there. And hold their hand, because we never had anyone holding our hand. We had the knowledge, but we were alone in the construction field doing all this stuff. No one was there to help us. And it takes more than knowledge. It takes a supportive community, and that's really what we're trying to do. Now, in the private market world, what we teach people how to do, first of all, is the importance of self-directing the registered funds. Most people have TFSAs, RSPs, a group fund. I also forgot to mention, my husband doesn't work now either because of this. So on his 40th birthday, he went in to his employer and he resigned.
Punched him in the nose.
And it took us 5 years to do it, and he did it. And it was amazing. Now we're both home. We're both home with kids, and we're both playing tennis, and we're both
That's exciting.
Having that dream. And he actually, all the money that we were matching with the group employer and all that stuff, we pulled that huge chunk of change out that we did save up, and from his group fund, and because now it was transferred to a LIRA. And we were able to also, on top of our RSPs, our ESPs, and our TFSAs, our LIRA as well. So once you learn how to, and it seems like it's so much, people think they're dissolving their funds or they're dissolving their registered funds. You are not. You're simply transferring. And we use Olympia Trust. That's my favorite portal. And it costs $150. And there's simple step-by-step instructions on the website. And if you are invested with a particular issuer, they can actually help you, walk you through that transfer. So you don't really even have to do it yourself. But people get psyched out, and I think even that is hard. Change is hard because change is scary.
It's stressful too. You're moving a big portion of money around.
The first thing you could do is start investing passively this way. Now, apartment syndications are usually $25,000, $50,000, whatever. They're a great way to invest too. I do apartment syndications. It's a bigger chunk of change. In the private market world, obviously you're going to have a certain amount of capital available.
How much are you talking?
I mean, even with Addy Investments, we just had presented RPI, and they're not the private, but you can invest for as little as $1 with Addy investments. And these are top 8 asset classes up to $1,500, but that's a totally different tech crowdfunding concept that we could get into after. But for the private market world, obviously you have to have a little bit of money available there, but then they could diversify it for you, but you pick. It's not the question that I got from the mutual fund company. What's your risk tolerance? Low, medium, or high? And then you never hear from them again.
Who is diversifying that investment for you on the private money market side? Like, who is doing that?
An EMD, a licensed exempt market dealer. So that's another point of security that, I mean, you guys could go out to your local groups and your REA, and there's going to be some guy, just like the guy in the room, who's doing the LLC and whatever, and you can buy his apartment thing too. Or this to me is an extra layer of protection.
Right. Yeah.
When we work with people.
Yeah.
I spend most of my days vetting investment opportunities because I grow my money as an investor. And I talk to 99% of stuff that I hear I don't move forward with, because a lot of it is everyday people that are just, starting out and doing it, where I prefer to do it with, I don't like that share structure. I like, licensed professionals. They have something to lose. They have
100%.
There's for you, they have someone to answer to. What sort of thing.
What is a EMD typically looking for you to come to them with? Like, are they saying, like, if I call him and I said I got $10, he's probably going to tell me to go pound sand. But if I said, okay, do I have $10,000 or does he need $100,000? What do they want to see for us to get involved in, like you said, some of these storage plays or new developments, let's say?
So you always want to invest in opportunities that are not very lucrative for the issuer. This is the same thing with insurance. We're really passionate about infinite banking insurance. This is our new, actually blockchain is my latest obsession. Infinite banking, we've mastered now. I love that too. But I get onto these things, and this is what I'm supposed to be doing, is learning and sharing. So with commissions that are structures and this and that sort of thing, it's not very impressive on their part. And obviously time is money too. And these are people who are used to dealing with the top 2%. And it really is a volume play.
Yeah, right.
Anyone that works with RPI, they feel our mission to work with everyday people. And they understand it's not the same thing. But at the same time, it takes the same amount of money or time to do a $10 transaction than it does a $10 million transaction.
Right.
Yep.
Well, I would honestly say for some of the private market things, normally a book of $100,000, if that's all this person was going to do, would be very, very, very strong point. But I've seen people do things $50,000, $75,000. Now, if they know they're working with us in real estate and they're looking to do BRRRRs and they're looking to do different types of transactions, you have to realize there's also a strategy that they're going to reinvest that capital as well. So when that's why a lot of the wealth professionals love to work with us too, because they see how we can take everyday people and make them make more money than they ever knew was humanly possible. When we do BRRRRs, our investors are pulling out between $75,000 to $150,000.
Yeah.
And this is just after a few months.
Yeah.
This is the average family makes $75,000.
Yeah.
Real estate, you do a couple of these.
Sky's the limit for sure.
Even one of these, this is more money than.
So they know that then, these folks could have capital free up in lump sums coming down the pipeline. So there's a bit of a long play from their perspective too.
What is an EMD charging on a commission basis? Like, just out of curiosity. So I'm giving them $100,000 to invest in one of these storage plays. What am I expecting them to charge me for doing so?
Very good. So all the fees, and it's not big on your part at all, especially when you can compare that to the public market things as well, because you have to look at the publicly traded markets and when you're doing mutual funds, right? If you review your past 5 years of returns, you're going to get 5%, okay, which isn't bad, 5%. Minus 2.5% management expense ratio fees, and then minus 1.3% inflation. What are we growing our money at? It's under 1%.
Yep.
So here, with the private market world, they have fees. They are not costly, and they're disclosed to you. So you know everything written out in front of you of what they are making and how these fees are allocated. This has to be all clearly written out in the share structure. And you want to hear a funny thing is that, you are more informed when you're investing in private market products than you ever will be, except the first thing you read, and this is a securities thing that you
Big
read
disclaimer.
on the statement is, I hope you know that you are I don't know if it says, I hope you know.
Yeah.
Or it's a little more legalese than that. But you are investing in a high risk investment. You could lose all your money.
Yeah.
This is how risk. But do they tell you that in stocks and mutual funds and
no?
all these things?
Somewhere within probably your web broker platform, it probably says that. But
the fine print. I'm sure.
Exactly. Somewhere deep within the fine print. But no, it's
they
not.
Don't tell us that.
It's
they
not
just
right
point
in
to
your
the
face.
chart.
Deep there, but not to
They
your
just put
face.
the chart at the back of the cubicle.
The first thing you sign here, it says you are entering a high risk. It's like to scare. But here's my question to you. So they want us to invest in the banks, and they want to invest in these things that we could easily are as risky. Where do you think they're growing their money?
Totally, by lending it to these private corps anyway.
Exactly.
Yeah, 100%.
When I was broke, I had rich habits.